This is Matt Russell, and welcome to the DailyFX Forum.
Hello and welcome to the DailyFX Forum Highlights video for November 5th, 1 a.m. So I'm just going to dive right in here. Elliott Wave, the Elliott Wave thread, and this post by Justy speaking about corrective action, impulsive action, and C waves and wave threes, kind of being the same thing. And personally, I agree with that sentiment, and it's just when you're dealing with something as abstract as fractal geometry, it's just very important to keep in mind that trying to be as precise as Elliott Wave expects you to be, if you will, with your analysis, it's just not reality. And in my firm belief, like, Elliott Wave works, but the scale that it's working on, we don't really know, and it's constantly changing, and it could be inverted, and that's the thing to keep in mind. In that, don't put too much weight on your analysis, and even if it has proven correct for the past, like, let's say, several sessions, that would only increase the chances that it's going to prove incorrect in the future as more traders get into that scale, if you will. And that's what you have to. It's such a delicate balance. It's like an ecosystem, the market. And as soon as something is figured out, some sort of tendency is there. As soon as money goes onto one side, it kind of flushes that out. So it's very important to keep that in mind, and also it helps you to keep a level head with your analysis and always expecting that you can be wrong. So here is the pound dollar thread, and something that I wanted to comment here. By Jay Shirky here. I don't think the Bank of England has forgotten the UK's dismal, I assume you mean GDP, and they are set to discuss quantitative easing in 12 hours. And what I would add here is just to keep in mind that, this is my opinion, of course, is that these people, the Bank of England, the Fed, they're all just guessing, and I can guess with the best of them. And what I mean by that, and I don't mean that in an arrogant way, I mean that in terms of the market itself. It's like, what are they going to do that's going to surprise the market? Absolutely nothing. The market has discounted already every conceivable fundamental, fact. So that's why, the market will move in opposite directions as expected given the news. So that's, it's very important to keep in mind, and don't give these guys too much credit. I bet there are 10 guys on this forum right now who can walk in that room, and add something that, those guys are adding to the discussion right now. So you have to kind of lose the mystique, if you will, of these central bankers and things like that. So anyway, I wanted to head to the charts here and show you what I'm looking at. And this is the pound dollar. And basically, I just wanted to highlight here, this was I guess a triangle or a little wedge pattern forming here. Essentially just support and resistance, at its most basic level. And I also wanted to say that the symmetry here, we have a spillover on the bottom, and it's sort of an equal amount of spillover on the top. And what I would say is going into the the meeting this morning, the Bank of England, prices will be contained, I would say, within this very wide range. And again, that's not a huge bet, but this is how I would personally trade this release. And I gather there are a lot of other traders out there who are kind of have the same mentality as I do. I would just sleep through the release. I don't care. I'm gonna go to bed about 2 hours before these guys get together and and tell the world what they figured out in their little room, right? Which is absolutely nothing, believe me. So what I would do is in this case, I see prices are towards the top of the range here. I might look for some short trades and placing my stop above these highs here. Maybe make 2 or 3 of them. Maybe 10 pips here, 10 pips there, and again, just go to sleep. The other thing I wanted to highlight here was the also what I was speaking about before in terms of Elliott Wave and in terms of just keeping it simple. And what I want to discuss here is particularly people with no background in Elliott Wave and who might very well be overwhelmed by discussions about Elliott Wave. The most important thing to understand about Elliott Wave is impulse action and corrective action. And this is a good chart here. This is a 5-minute chart, and we could just see that the market is moving higher, and there are very large green candles when the market is moving higher. That means that the market's moving higher at a high rate of speed, and then we can see that it goes to the side at a slow rate of speed, and essentially, basically, corrective actions take longer than the impulse actions. So that's basically the gist of Elliott Wave, and in my opinion, it's that basic understanding. And believe me, I read Practice book thousands of times, and it's absolutely fascinating. But in terms of predicting asset prices, there are other, more simple methods to apply. Again, this is Matt Russell. Thanks for listening.